All right, hello everyone for the second stream of the day here on the Financial Summit Network. We are back with the one and only Mark Wood, an incredible analyst, and he's going to bring us his charts as we do every week. Mark, how are you today?
Excellent. I'm out of Florida for the time being, back at my home in Maryland. Still wearing Gators. Go Gators.
Got your gators on.
Gotta stick with the Gators. I'll be back down in Florida for another month and then full time back up in Maryland in July. So I'm kind of enjoying bouncing back and forth right now. It's getting a little hot in Florida, so it's time to leave, I think.
I am off to Texas tomorrow. I am then in Las Vegas Sunday through Wednesday, and then I will be back in Honduras and then Panama. So I got a bunch of travel coming up. I will be playing poker in Texas Friday and Saturday. If you are watching this and you have a direct line to me and you play poker and you're going to be in Austin, you want to give me a text message shout out. Same thing for Vegas. I'm playing at a charity poker tournament, and then we're having a Bitcoin meetup with another poker game the night after. So hit me up if you're watching this and you play poker and you're in those two cities. All right. On that note, oh, don't forget about the actual financial summit, the in-person one coming to the Maldives in March. I can do announcements all day, but Mark, we're going straight into your charts, and I'm sure I'll have questions. I'm sure you're going to cover it all. Let's start with Bitcoin, and then we have some traditional market, and I think we're going to talk about some FX. So go
Perfect.
ahead, start anywhere you like, and I'll fire away.
All right, hold on a second. Let me get my screen up. You should be able to see it now, correct?
Yes, I do.
Perfect. All right, so I was looking at the 4 hour earlier just to kind of get an idea of what's going on. And if you notice here, I've got a light green and a dark green moving average. The light green is a 55 EMA. The dark green is a 55 SMA. The black one is a 200. That's the general guide. Above the 200 on 4 hour, generally bullish. Below it, a little bearish. But I was noticing, not surprisingly, we can see the EMA has traveled below the SMA, and that always takes momentum away from the time frame whenever we've got an EMA from the same denomination as the SMA. But check this out. If I put the 200 EMA on, then we're good because we've got the purple 200 EMA crossed above the SMA below. So that's strong. This should be pretty good support around 64.6. However, until the price is traveling steadily above 69,000 to get these moving averages crossed again, there's still going to remain pressure to the downside. So that's one of the things I was watching. However, when I flipped over to the daily, I saw that we're very close to getting a bullish cross on there. If I zoom in right here, we are about to get the 50 EMA crossed above the SMA right at around 65.5, which if we look back here, that is right where that swing high was that we were all watching to see if the price could push above that and go for try for a higher high. Still haven't quite tackled this range in here, and the prices you can see wicks at 69.8, 71, 72. There's still a lot of selling happening up here. However, if we look back in February as to when that light green moving average crossed above the dark green, there's a little bit of consolidation and then momentum kicked in. So as long as the area of those swing highs around 65.5-ish, it could even probably drop down to 64K, and then hopefully start closing back above here. These should be good. So I would be looking at um, a test of those swing highs at 65.5 as a possible buy area. We can take a look at some other things, but what do you think about that, Tone? What do you think about that price range as a potential dip?
You know what, I'm more slightly fascinated with the concept of using the same exact moving average, not look back, and comparing the exponential version to the simple version. I've never seen too many analysts do that. In fact, I don't ever remember looking at charts or even learning about that kind of relationship. So how much research have you done on
Oh,
back testing strategies and expectations when I mean, I'm assuming you're doing this with the 20, the 50, and the 200?
yeah, I do the 50, I do the 200, and one of my main EMAs is the 21, and I will sometimes look at that relationship. The 21 is a fib number, and that EMA, we've shown it to be super relevant on all time frames, all markets, all charts. But for a general idea, I will.
I'm sorry, is the green the 50 or the 20?
So 50, the 50.
50s. Okay,
The
those are the
dark
50.
the
Okay.
dark green, well, it's actually 55. I'm using the fib numbers.
Okay.
Okay, so the dark green, here's something to watch. So if
Right.
you
The dark is the simple, the light green is the exponential. I mean, that makes
right,
sense. Right? Exponential would be higher on huge rises, and exponential would be lower during pullbacks.
exactly. So for those that don't know, in EMA, exponential moving average, it's weighted to lean to reflect the more recent price action. I don't know how the math works, quite honestly. Um, the simple moving average is just going to tell you the average price of the last. So this is going to tell us the dark green, which is at 65,353, is telling us that the last 55 daily candles have trended at an average price of 65.3. As you can see, as the price was as the price was rising, the EMA started to take off above, and that's very bullish. And then as the price started consolidating up here at the highs, we could see the light green moving average starting to roll over. So now when I get this cross here, I start paying attention. And it is very possible sometimes, even after this cross, to get one more swing high. However, this is like a magnet. This is going to pull the price down. It's up to the buyers to prove these crosses wrong, especially on something like daily. But it works on any time frame. We could go to the 10-minute time frame and watch these patterns. So now, if we look back here, we had the same thing. We had sideways consolidation, and eventually the EMA dropped below the SMA and it pulled price down. So now what you look for is price has to pick up the SMA long enough to pull the EMA back above it. And this right here formed a little bit of an inverted head and shoulders that played out to the target right around the swing high up here. And that was enough momentum. That was enough momentum to get the exponential back up. So what I'm looking for now on daily is for the price, maybe a test of this, and could even wick below or even close a candle or two below. But here's something bearish that I watch for. If we are looking close to a bullish cross, they have not crossed yet, and we get a strong dump and it turns the exponential moving average down before crossing, that is really bearish. That is kind of like a swing failure. Um, so, this price range right here in 65.5 is really, really important. And I think, so if you remember, Tone, we talked about this 5-day cross on the last stream right here. So this was a mega bullish cross because we've got the 200 EMA crossing right back above the 200 SMA. And I showed the examples of what happened the last time. Right here, we got the price moving from 12K up to 60K. And I'll talk about this really quick because it's kind of fascinating. And then back here in 2016, late 2016, we got that bullish cross of the 200 moving averages right around $700, $800. And of course, that took price all the way up to the all-time high. But notice this, I find this interesting. And this is why I follow these so much, so closely. So here is the 200 EMA moving sideways, and then we get the drop. So now it's going to react to that drop a lot stronger. The SMA is still climbing. And then we had this run from 3,000 lows to 14K. And I remember watching you stream. You know, I remember this period really well. You were like, it's going up too fast. Ugly old goat was on
Yeah,
there.
one of our best calls. We streamed the either the day before or the day of the top when it was hitting that 14,000 area. It was me and Ugly Old Goat. And we were both, and he made such a case. He's like, it's about to crash all the way down below 10,000. And he made the case about how you had massive contango where
Yes.
the futures were like $1,000 higher than the underlying. And he's like, this relationship will get annihilated. And he was absolutely right. That was one of my best streams, probably that 1 hour. We gotta find the video from that day. It was like June 14th or something like that.
Yeah, I mean the top was around late June, June 25th. So
Yeah,
now,
the video would have been like June 20, 26, 27th then.
you know what's funny? What I remember about this is I was performing a summer concert, and I had bought all down here. I've gotten very good at accumulating lows. I'm a knife catcher, and when I saw this pop to 14,000, I was going to sell. I don't really sell very often, and I had some Bitcoin on Gemini, and I could not get on a Gemini. I could not get on. It was during that period, you know, those exchanges that get over flooded. And the next thing I knew, by the time I finally was able to get on, this is a 5-day candle. It had already dropped. The price had already dropped back down to like $11,000. And then we had to bounce up here. But getting back on track, look at this right here. During that entire period, we never had the 200 exponential cross back above the 200 simple moving average. And then here is where price really tried to hold the 55 EMA, and then it finally rolled over. We got a bounce off of the 200s, COVID top, crash. So the point is, as long as the EMA of the same denomination is below the SMA, that area is subject to get tested and less likely to hold. When the EMA is below the SMA, it is less likely to hold strong drops, which we see right here playing out perfectly. And then we can watch the rebuilding of the structure. This is a 5-day time frame, so this takes a long time. However, we had a bounce, we had resistance at the EMA, tested the 200 SMA, finally started popping above all of those moving averages. And then we got the EMA crossed back above. And finally, right here in October 2020, after this consolidation, after the halving, now we have on 5-day 200 EMA above 200 SMA, 50 EMA above 50 SMA, rocket ship, straight up. So we have that structure in place right now, and it's the very, very beginning of the bullish structure, right? So I'm leaning very bullish long term still. However, one of the things I wanted to talk about that we put in the headline was perhaps we don't see an all-time high for much longer than expected. And I've got a couple of bearish ideas to share, if you don't mind.
No, please. By the way, I found the video. I posted it. It was June 27th. We streamed on June 27th of 2019. And
That is, let's see. Let me see if I can find that real
That might
quick.
have been the day after. Hold on. It says the title says Bitcoin drops 20%, but I clearly remember talking about it before it dropped. So maybe I need to find another one that took place right before that.
You guys, you and Ugly Old Goat were talking about this rise too quickly, right around June 21st, 2nd, 3rd, 4th, probably right around there.
Yeah, I think the video I found was the follow-up video. There needs to be another one, I think. I'll find it. All right, I'm sorry, go on. So
Okay.
yeah, but I really like that crossover between the purple and the black, and that
Oh
sets
yeah,
us up nicely. And yeah, there may be pullbacks, but man, that relationship's looking great for the next 3 to 4 years.
it looks fantastic. So um, what
Wait,
I
not on this chart, on the other
yeah
chart you had,
yeah,
yeah.
but we can see on daily we've got the EMA above the SMA, and so the other bullish relationship I look for is the 21 EMA crossing the both the 50s, which we've got right here. And of course, the price is putting pressure right on it. What we don't want to see is this roll over and lose 77,000 and then a strong drop. And if I'm seeing 3 or 4 candles closing below 65K, I think that these lows are in jeopardy again, between 60 and maybe even the prior lows. So here's Consensio. We'll take a quick look at that. There's a clear resistance trend line starting to form. I could make this a little less conservative. I like to try to keep it conservative, but however, moving averages on Consensio are bullish, very bullish. I am watching one thing, um, which could lead to the bearish argument we're getting into. But here is that trend line. I've been waiting for closes above 70K on 2, 3, 4, 5, 6 days, and we just can't get it. One thing to watch out for is right here, the dark black. This is not the 200 on this. This is the 30 SMA. This is Tyler Jenks's long-term moving average. And this is my 21 EMA. I'm projecting these to cross, and that is not good. We can see right here when the 21 crossed just below the black, we almost lost the structure and finally got back above it. And then once again, we lost the 21 below the black. So I'm seeing momentum. Basically, here's a simple point. Things are bullish, except price has to get out of this sideways consolidation quickly. I think within the next week or two. Or we will get into some of the more bearish scenarios. However, here on 4-day and 5-day, all moving averages on Consensio are structured bullish. So which also gives us room at least down to 62, 63,000 to keep the structure bullish. But let me show you this real quick too. This is a very, very simple Heikinashi investor mode trading scenario. Okay. This is, and I'm not going to take credit for this. I actually found this on Twitter years ago, probably 3 or 4 years ago. And I don't remember the source, or I would name it, but I back tested it. Initially they liked it on the 2 or 3-day. I prefer the 4-day, but it's 2 moving averages and Heikinashi. And the moving averages are the 12 and 26 EMA. I have no idea where they got them from. However, the rule is you buy the first green candle that closes once the red moving average has crossed the black. You can front run this a little bit, but if we followed that rule back in 2020, it would have got us in at around 10,000. And basically you don't sell, you just hold. I would consider buying dips on the black moving average area. Um, that was something that they didn't talk about. And then you sell the first red candle or a bounce into the cross. So you're going to miss a lot of the bottom, a lot like Consensio, a lot of the bottom and a lot of the top. However, this got you in at 9,000, had you exiting. Well, even if we're super conservative, exiting at 38,000. So that's one trade, and you've got 400% profit. Not bad. Um, and this got whipped around a little bit, but here we are. We're back to bullish, and so um, until we start seeing the price close below 62,000, the structure is still perfectly fine. In fact, the low 60K should be a dip buying area. But right here was an area where I was considering, I was still bullish, but I was like, okay, if this digs in and the moving averages cannot get picked back up, we could go back down to 20,000. But we can see a nice rise above. So then you would enter back in at 31K and you'd still be in. And you'd be 2x, almost 2x. So that's just a simple strategy for people who don't want to trade and just want to try to get a good part of the swing. Now here is my bearish scenario. I'm going to shout out to Socrates, Tyler Coates, who has finally resurfaced from the world, and everybody's very happy about that because he's
Yeah,
absolutely.
we might have him on this channel once a week or something. Mark, you mind closing the right side panel so we can have a bigger chart?
Yep, sorry.
Nice.
So this is an indicator called MSR, EMA, SAR, and they built it off of moving averages, exponential moving averages, and the parabolic SAR, which I have on this chart somewhere, right here, the lucid SAR. Okay, now I'm not going to go into details of how this works. There are videos online. I believe I believe the website is Alpha Analysis, where you can find some instructional videos on this. However, what I will say is this is the 12-hour chart, and this is the sky right here. This, we can see 4 shades of gray: light gray back in September, slightly darker gray, and then very dark gray. So he calls those stormy skies. And the trend flipped bullish with almost like a bluish gray. So this is fresh right here. And this, when the gray is above these yellow areas, the trend on the time frame is generally bullish. However, when we start getting these very dark grays, that it's a warning. It's a big time warning. And basically the only way that I know, I understand how they develop this to a point. The only way to negate this is to start basically printing new all-time highs, and that will get a fresh trend. But what I wanted to show, and this is, I have an eyeball here at 55,000 because I believe that area is still in play. I still think we might see like some kind of a double bottom area, and until I'm seeing this trend line broken right here, and then the price trending back into the gray and at least up here at, well, that would be new all-time highs, then this idea stays open. And it's going to take me a second to scroll back, but we've only had this structure twice in history. Going back, this is Bitstamp, so it's not the index, but I just want to show what happened the last 2 times we saw this. Sorry for the delay. So here is actually, this is a really great example of it acting in reverse. So this was showing us in December 2018, right at the 3,000 lows. This was showing us, hey, it might be time to stop getting bearish. This trend is exhausting to the downside. And what was needed was to take out these swing highs from way over here, around 7,500 to reset. And then we got a nice fresh bullish trend set. So that is the bearish side of it. But here is, hold on, I gotta find it. Right here. Okay, so we are in July 2017. We have the same scenario. We've got the dark, stormy skies. This is telling us to be careful being bullish, getting too bullish, at least until new all-time highs are printed. And we can see the yellow and the green moving averages, the 21 and 55 moving averages, were lost. And it's very hard to see in this chart, but I've added my own, of course I've modified this a little bit to fit my system, but this is a fib number EMA number 377, and the price dropped almost down to there. And that is why I have that eyeball on my chart, because that EMA is currently sitting at 55,000 and climbing. And then we can see we had this massive drop and then a nice bullish reaction. Like, I see anything down to 55,000 as a mega buy. All in, close your eyes, not financial advice. And then we started printing new highs right around 3,200, and the trend got bullish, and then off we went. And there was one other scenario.
All right, Mark, but we do have to move on, right? We have 25 minutes to go, and we still got to cover other markets. So try to find it real quick, or we got to move on to other charts.
We can go on. I just wanted to bring this up. We've talked a lot about bearish or bullish situations. So here we are here. So what I would look for is the green moving average at 66.5 to get lost, flip to resistance, and then the yellow to cross back below it, and that would set up a scenario for a bullish or a bearish retest of these lows. So I just wanted to put that out there. And if that happens, it could take months into July, August, September to reset this and get back to this prior all-time high of 73K. Being said, as long as this 60, well, let's just call it this swing high, this area where I have the horizontal 66, 65.5 holds, and we bounce back up here, then this will reset and all those concerns disappear. What do you think the probability of that is, Tone?
I think consolidating between 65 and 75 into September is very possible. I think it's very possible. And people have to realize that the longer we consolidate, the stronger the up move is going to be.
Yes.
And
I agree 100%.
I would almost be more concerned if we started to go towards 150K right now. It would not be very stable. We have not had a real pullback. I don't want to see a pullback, right? From a structure point of view, what happened back in 2019 was very good. It's what happened in 2020 with the crash was bad. So if you put your cursor on, this is a 2-month chart.
Yeah,
if you put your cursor on the COVID crash candle.
Right here.
Right. If that wick doesn't happen, that's a very clean structure.
Very clean.
So having a pullback down to that yellow moving average, wherever you have it, that's actually very, very good for Bitcoin long term, but I don't want to see Bitcoin go down to $35,000 or $37,000. It won't be good for any Bitcoin business right now. Like half of mining will collapse. Way more companies would go bankrupt. It would alter so much in the world of Bitcoin. So I don't want to see that. But from a pure chartist point of view, we've gone up unreasonably high and unreasonably fast since the December lows back a year and a half ago. It's been like a rise like this is enough to top the market for a long time, but we're not there yet. So I would rather see a pullback to 40 and then a move to 150, then a move to 120, because if we go to 120 this year, we can easily crash back down to 25,000.
I agree. I totally agree. And you know, just to go with the bearish argument, I brought this up on a couple of streams. This candle here was super concerning to me when it printed. I mean, this is a topping candle on a 2-month time frame, and what's happening now is totally expected. Like,
By the way,
whenever
Mark, if you turn the MRI on right now on this chart, we
top,
got a problem.
you got a problem. I know. So hence the title of the show today. I wanted to show it from a shorter time frame in the 12-hour chart, just to kind of show you that bearish structure that Socrates' indicator is telling us about. And then this candle here. Now, what I've learned after watching candle structure is when we get a candle that might be like a shooting star or a gravestone doji or something like this, I find it very common for the next 1 or 2 candles to I call this exploring the wick. The traders, they want to see how serious the sellers are in this range up here. So this move, this solid green candle looks great. I mean, it's very bullish. However, until that all-time high swing high is taken out, we could see this go sideways. I don't think it will go to yellow. I do think there's a possibility still that the price could go to the orange. The orange is the EMA, and on a high time frame.
Yeah, but the orange is going to be a lot higher in 3 days.
Yes, it is. Exactly right. Because if we look at the last 2-month close, it was at 43K. It's currently at 48. So we could expect about a $5,000 rise, maybe even a little bit more, which would put that EMA in the low 50Ks. So, you know, right around low to mid 50Ks, I still think there's a chance if the price remains sideways, we are going to see moving averages roll over. And I'm from a cycle timing standpoint, maybe July, maybe September. However, as long as this is the short term EMA. This is a 3M EMA, which I don't follow too closely except for on higher time frames. And as long as the 2-month and the monthly are closing above that, then we're generally bullish. So we're 2 days away from a monthly close. We need the price above 64.1 to stay above the short term moving average. And it's fine. We could get a little bit more sideways and trend back up to new all-time highs. But I agree with you, Tone. Slow and steady is better for sustainability.
All right. So final word on Bitcoin, and then we got to look at some effects and some NVIDIA. You got other charts for us.
Okay. Final word on Bitcoin is this. So this is called BBWP. It's a bottom oscillator. I'm basically this revolves around Bollinger Band squeezes, and it's a visualization. It's a great visualization of when the Bollinger Bands are putting on a squeeze, and when we have a squeeze on something like 4-day or 5-day, that is a recipe for an explosive move. It does not tell us direction. We have to use oscillators to get an idea of direction. I learned how to use this from Eric Crown. He is such a brilliant analyst. If y'all don't know Eric, You got to follow his channel. He's one of the best in the business. And basically, what this is showing us, the bottom oscillator, is the squeeze of the Bollinger Bands. And one of the things I will do personally to get my own idea is I will put a price range from the bottom to the top, and I'm looking, and the bands are about 20% away from each other, which on 4-day is huge. So what I have done here is I have highlighted the last, let me see, the last 1, 2, 3, 4, 5, 6 low volatility readings when this indicator dropped down below 3 or 4%. And what this tells us is that 5% of the time of the last 18 5-day, 4-day candles have the bands been this close together. So it's measuring a percentage. I just basically look at it as, hey, the bands are squeezing, a move is brewing. So I took an average of these moves, and it's way more than 25%, but I like to stay conservative. The minimum smallest move we got out of this signal was 25%. So projecting from the top band, a move up, that takes the price to 90,000. Projecting from the bottom band dropping down, that takes us down to 44K. I don't think 44K is happening. So I kind of have a bias that we are going to see price pushing above the all-time highs before too long. And here's a bullish sign right here. 8 EMA is crossed above the middle Bollinger Band as long as 65, 66K holds, which we've been talking about all stream. It's good to go. It'll trend sideways and try for a breakout. So this is a really interesting indicator that just basically shows us volatility is trending and building. We have a giant move brewing, and the move could be as much as 50, 60, 70% or more. Okay, that's good for Bitcoin. There's plenty more to talk about, but what else would you like to look at, Tone?
Let's look at the stock market and then FX markets. So maybe S&P, Dow, or NASDAQ, a couple of important stocks in those markets, and then we can take a look at the US dollar.
Okay, so real quick, Tone and I on the last stream, we were talking about NVIDIA and the massive parabolic rise it has had. It's one of very few assets in the world that has kept a 10-year pace with Bitcoin, and might even be outpacing it right now. We can take a look at that. But I've chatted with Socrates about this. I'm gonna look at this in a different way maybe next week. But as we can see, this is acting very, very much like a hyperwave, which is a years-long accumulation where basically nothing happens to the price. And then you have this sudden move. Tyler Jenks taught us to just pay attention when the price finally breaks above. And then that moves into phase 2. We had a nice little rise back to the trend line. This is kind of a short phase 3, in my opinion. And then price just went parabolic. And I'm actually inventing a new part of hyperwave that I'm calling phase 4.5, because this has launched off of phase 4, which is typically a very steep curve. Like typically phase 4s would be like this. So I don't know if this is exactly fitting the bill of a hyperwave, but it's, as you would say, talking about MRI tops and whatnot, it's kind of acting in the spirit of a hyperwave. And it's still going up.
Yeah, but phase 4s don't last this long. So it needs to, and I don't see NVIDIA crashing any day now because of the geopolitical situation and more sanctions on China.
I totally agree. So Socrates suggested looking at it on monthly, and I have done that with a few assets. I've looked at the S&P on monthly hyperwave. Like Tyler would always focus on weekly, but when you have something like an index that has so much trading history, in fact, here is a chart just an idea I've had of the S&P being in a 100-year hyperwave, in phase 4 of a 100-year hyperwave, which started with this, with basically after the 1929 crash. It took 40 years to get back to, or 20 or 30 years to get back to their nice long phase 3. This I call a rogue wave, when the price just jumps so far above the trend line, and we had this double top right back to it, and then the lows of the 2008 crash are what I believe has triggered this decade plus long bull market. All these drops are nothing. These are just bear market or bull market corrections, in my opinion. Of course, they can call them bull markets if the S&P drops 25%. They call that a bear market or whatever. I don't know. But to me, this is something to pay close attention to, because if we get a parabolic top and then a lower high and lose this purple trend line, it's not going to end well, in my opinion. But there's plenty of time for that to play out. What do you think, Tone?
Yeah, I mean, that's in line. This looks like it's perfect for you to draw your phase 4.5.
Yeah,
And that phase 4.5, I think, is going way higher. And I think it'll break in about 4 or 5 years from now. That's when it breaks, and that's when all hell breaks loose, and S&P goes down to back to the orange line or even the blue line. But the reason why it would go down is because the S&P will just not have stocks to add into it. Like the top companies, they will likely delist, go private, go on the Bitcoin blockchain. I mean, it's not going to be because, I mean, either that or we all lose electricity, right? So it'll be something either catastrophic that affects the world, or it becomes because like NVIDIA just says, no, we're out. The United States is splitting up, and we're not going to be in the S&P because we're not going to have publicly traded shares. We may go on the Bitcoin blockchain, like Color Coins project. They may go private. Whatever it is, I think companies are going to bail off the system, and that's what's going to cause the great stock crash after it rallies to ridiculous highs, and then the collapse of the dollar just makes it go exponential.
right. When the dollar collapses, which it's nowhere near doing, that is when the prices are going to rise exponentially parabolic.
Right.
That's when the U.S. stock market will look like Zimbabwe,
Right.
right? So check this out. This is something I'm kind of surprised I hadn't seen it earlier. I believe I might have been paying attention to it as it was happening, but this is something called a Livermore accumulation cylinder. And Jesse Livermore was around, what is his era? 20s, 30s?
20s.
40s. Okay.
20s, 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 before the crash.
Okay, so I think what Tyler Jenks discovered was a different way of looking at a Livermore accumulation cycle, because you can see that with this drawing, it has what we would consider phase 4 and a hyperwave, a drop to a lower high and then a crash, and you would probably look to like drop all the way down to this latest trend line. But it's got 7 touches, one on the top trend line, one on the bottom trend line, back towards the top, bottom. And when I was looking at the S&P this week, I was like, this is textbook. 1, 2, 3, 4, 5, 6, 7. There was a little bit of accumulation to get out. And now I don't think this is topping by any means. I think maybe this drop here was just to test this support right here. The current monthly candle for the S&P, which closes in a couple of days, is potentially engulfing, which is bullish in my opinion. It would need to close above 52.57, which I'm not quite sure if that's possible or not. But even if it closes lower than that, this is still a very bullish. And where are we on the MRI? So plenty
We
of
got some
room,
room. We got some room.
plenty of room to move up. So, generally speaking, I think Tone and I are remaining very bullish on the stock market, not really anticipating any kind of recession crash. Although there are some things to be looking at perhaps in 24 or 25, and we can go from there. So here's one thing I was also noticing on the S&P. We've got one sticking point right here on the 2-week chart. And this MRI resistance is clearly relevant. And we can see whenever the price finally pushes above these MRI resistances, we get a nice pop. We can go back as far as 2019. Here's a little bull trap at an MRI resistance where I can talk about that later. I've discovered some things that might interest you, Tone. And then here's another one, price pop, another one, price pop. And so we are just waiting. Another one, price pop. So we are just waiting for, let's just say 53.50. And of course, this is a 2-week chart, so we need to see several 2-week candles. I need to see like at least one or two. And once you get up there, we can certainly wick back down. But once this resistance is cleared, I think the S&P is going to be ready to roll. Again, though, we have to watch out because if it's accumulating for too long, it can roll back over. So this is an area that I'm watching very, very closely on that. One of the things I wanted to cover really quickly, if you're good, is mining stocks, Bitcoin mining stocks in the stock market.
Yeah, go for it.
Okay, so
yeah, mention Bitfarms. I was watching it go up this morning on the news that they might be getting bought, but then it crashed hard. So I'm assuming they turned it down.
So this is Valkyrie Bitcoin Miners ETF. The ticker is WGMI.
Yep.
And we can see it. It's just doing absolutely nothing except for consolidating in this triangle. I mentioned on the couple of live streams, this is about the time where I would start to look for some action outside of the triangle. I would kind of draw a circle right here. And with this symmetrical triangle, it's 50-50, and I don't trust them at all. I just look at them for timing. We could see the price pop up here. We could see the price give a bear trap down here, and then still accumulate sideways into July and August. However, this is just interesting to watch. But one of the things that I've and CLSK is kind of sitting in a diamond pattern. If you can imagine kind of a diamond top, this can kind of go either way, but I would think would eventually break out. So I was looking at the mining stocks post-halving. We do not have enough information to take any kind of patterns on this. However, last cycle, the mining stocks went nuts after the halving. So here is May 2020. CLSK was at $1.71. It peaked at $43.30. That's a 2,400% post-halving move. Riot was at around $1.85 at the halving. Massive run to $75 with a 4,100% move after the halving. And here we are with Bitfarms. Bitfarms kind of struggled after the halving. However, it still managed to put in a 2,000% wick once it finally broke above the highs around the halving. And currently, let's see what Bitfarms is doing. Same thing. there is a little bit of, I don't know, I would kind of be looking at this maybe as a bump and run breakout. It's still mostly just sideways in this median area. And I don't really have a bias on that. It's generally bullish above the middle Bollinger Band. Let's see where we are on weekly. Ah, there you go. Okay, so what I would want to see is the middle band has to get picked up. So clearly that is a rejection point right now at around $2.35. And we've got the moving averages crossed bearish. So we need 3-4 weeks closed above $2.10, and even better, 3-4-5 weeks closed above $2.30. That will start to pull these moving averages back up. And then once you can see, once the orange and the yellow are crossed and above the middle Bollinger Band, we get a little bit more bearish or bullish price action. So let's see what CLSK looks like. Yeah, CLSK is a little bit more bullish. However, we are now getting very close to the orange moving average crossing down. So this is an 8 EMA crossing below an 18 SMA. And with both the orange and the yellow below the middle Bollinger Band, that actually puts a target basically it puts the bottom Bollinger Band in play. And we can see that playing out right over here. We had the yellow cross below, finally the orange, they were both resistance, and we had several weeks to find a low. So as I was saying before with Bitcoin, we kind of need to see a breakout fairly soon, or this market is going to roll over and explore lows a little bit more. But so a quick question, Tone. What do you think the probabilities are that the mining stocks also rage again after the halving once Bitcoin is rolling? Do you think they will outpace Bitcoin like they did last time?
I don't. I really don't. I think last time, like the price of Bitcoin was just so high, and mining stocks were so new, and they were like a Bitcoinish proxy. Today, you have Bitcoin ETFs, and I think mining stocks are in trouble right now. The price of Bitcoin used to be significantly higher. I mean, Bitcoin will eventually become a hobbyist kind of mining situation going on. And I think there's going to be lots of mergers. I mean, not surprising that Riot tried to buy or is trying to buy Bitfarms. And I think there's going to be a lot more mergers. So that the Valkyrie ETF may only have like 5 companies in it. And once these publicly traded miners consolidate, then yeah, the single mining company could go up a lot if the price of Bitcoin rises a lot.
Yeah, I agree. I don't really know what to think. I still think Bitcoin's going to end up being the fastest horse in there, but looking back on in 2020, they really had a massive rise. But it was new, it was like a new shiny toy. So real quick, with the S&P, I just wanted to show.
We do have to jump onto some effects and the dollar. There is one question. Someone is asking, which one is better, Riot or MicroStrategy? I would lean towards MicroStrategy at this point. They just have a lot of Bitcoin. Looks like they're ready to buy more and more. And I think for now, MicroStrategy might outperform some of the mining stocks.
Yeah, I agree. So I think we might have looked at this on the last stream, but just checking back in. This is a Fibonacci I took from the highs in January 2022 down to the lows. I kind of Fiboswanied it a little bit, not going to the exact low, but kind of like where I kind of perceive the bottom to be outside of this wick, and we can see this one Fibonacci, the 1.414 extension is still holding price down. Once that is cleared, I would start to look for the S&P to trend around 55, 5,600-ish. And interestingly enough, there is a Fibonacci going all the way back from the 2020 market. It's a 2.618 extension that I think is also going to give the price a little bit of trouble. In fact, it is. If I put a horizontal ray on that, we can see the price has wicked right up there. So once again, we've got a years-long Fibonacci extension still messing with the markets and showing that they're relevant. And interestingly enough, this 1.414 lines up closely with that 2-week MRR resistance I was showing you. So, you know, we've got two technical things holding the price down right now, but I really think that once the price is above this area, we're going to see another leg up, and that is what might pull Bitcoin up. Yes.
Yep,
So,
no, I completely agree with you. All right, let's jump over to FX. And
okay.
guys, before we do that, please like, subscribe, follow us on social media, Instagram, X. Man, I gotta start used to saying X. I still like to say Twitter. And yeah, check out the in-person events. And yeah, Matt is trying to recruit people for the trading competition. Go for it, depending on check your jurisdiction of your country to make sure you are allowed to do that. And go ahead and join if you can.
We're not going to talk about this today, but maybe one stream. I want to focus on DXY as it pertains to Bitcoin, specifically talking about major tops. I kind of look at 2-week, 3-week, monthly tops. And what I am looking for currently is a firm confirmation that the DXY has put in another monthly top, and we haven't gotten that yet. But so we can see just from these two examples here, this was
But can
COVID.
you turn the MRI on?
Yeah,
It
let
is
me
a 2-week chart, so I don't know how useful the MRI is, but I would love to see it there.
yeah, let's see. Um, so MRI got this top fairly well. Let me see what it looks like on weekly.
Very well.
Yeah,
Perfect, actually.
perfect. Perfect. Let me
You
see what it looks
called the
like.
top perfectly on the weekly.
Um, yes, it definitely did. So going back, let me just go back to here real quick. Um, this was COVID, massive spike in DXY as everybody was going to cash, panic mode. Um, um, and we had Bitcoin drop to 3,900, and then DXY did nothing but drop all the way to the Bitcoin bottom. So once DXY starts to prove that it has formed a very solid bottom after a parabolic rise, that's when I start looking to get a little defensive or a little less bullish. But that was a perfect signal. This blow off top, bottom is in for markets. And then here was another major top for DXY. This was September 22. It takes DXY moves very slow. We don't know if the tops are confirmed until basically it really wasn't confirmed until October. And the Bitcoin market bottomed right around this time. It takes months for that bottom to form. And we're still enjoying DXY basically ranging and not showing anything too bullish. What I would like to see, I was hoping that this monthly candle would become like a twin top and engulf bearish this last monthly, and then I would be very bullish for Bitcoin and the stock market in June. But it's still just kind of ranging. It's not really showing any cards one way or another, which is why we see Bitcoin in the stock market ranging, not one way or another. They are not always directly inversely correlated, but there are periods of time when they definitely are are much more closely related. And I think this is a period to be watching for. And then one other quick thing I wanted to look at in the FX market is, of course, the Japanese yen, which I have been fascinated by. I've got a long-term chart on this. And so I need to add one horizontal right here. So I was watching this. Look, this just makes me laugh. This is where the US and Japan, I have no idea who are the people are behind the scenes. I don't know what central bankers or governments are talking to each other. However, it's by no accident or coincidence that this area is 0.00624 is being defended against the dollar with the yen. Because if that area is lost, it's open territory down for the yen to see new lows. What impact do you think this has, Tone? Why do you think that the yen was protected like this?
I would love to see this in reverse. I like looking at it dollar versus the yen, dollar and yen, instead of yen in dollar terms. Yeah. Um, I'm not I'm not gonna say it's being defended. I don't think it's been enough time. I just think the yen has devalued quite a bit recently, and I think the yen will lose that value as well. It's being defended for now. It's just a round number, 150, 160. Got a little out of control there, and I do think it's going to 200.
So I have been watching this chart. This is basically a giant inverse head and shoulders ish. And I just kind of put a rough estimate measured move up here. Basically, in my opinion, the move has played out to where I would expect it to, right to about 160. But we can see the similar horizontal here. I might be able to add one higher at around 164. But if the dollar trends higher, I think it's going to continue to crush the yen. And here's one thing interesting. So because of the weakness in the yen, it has been mega bullish for Bitcoin. And this is what I would expect in the US if and when we see major weakness in the US dollar, whether that's BRICS trying to play a gold-backed reserve, a gold reserve digital coin. But if we look here, the yen has moved a solid 40% above 45% above the prior all-time high. It spiked 45%. That would be like the Bitcoin jumping to 100K in the US. 95, 100K. So this is a great a way to understand what happens when a nation's currency begins to weaken, and showing you how even in a nation like Japan, there are citizens there that believe that Bitcoin is a powerful enough asset to protect their wealth. And Japan hasn't seen the type of inflation that the US has. They've been able to manage that by keeping interest rates low. But if the yen begins to crash versus the dollar, they might be forced to start raising rates. And that could spike some inflation in there. And so this chart, I believe, represents Japan front running that idea and trying to protect their wealth by pushing the price of Bitcoin higher. What do you think about that, Tom?
It's possible. It's possible, but I just think the Japanese yen hit a brand new low for the currency. It's just consolidating, and I think there's another big leg coming. I just think there's another leg coming.
So in theory, that bigger leg coming should propel Bitcoin to significant higher high against the yen, right?
Yeah.
Yeah, yeah. Um, that's basically all that I have. One thing we might delve into in a few shows is this idea of the 10-year, 2-year yield. I'm going to turn off my drawings, but this still has not bottomed. People have been talking about a recession and a stock market crash for like 2 or 3 years, and we're not getting it because this yield still continues to just linger at these lows right here. We do have a higher low, so it is time to pay attention. And maybe on the next stream, we can dig into this deeper. But we can see here, I've highlighted what happens when this does in fact turn around. S&P 22% drop, S&P 50% drop, 10% drop, 55% drop, 36% drop. So at some point, when this does reverse and begin to start trending up powerfully, I do think that we are going to see a pretty strong correction in the stock market. I just don't have any idea of the timing, and it's not showing me anytime soon. And another way to look at that is to watch for a top in the 2-year yield. I've kind of highlighted the same things here. This top, it takes a long time to fully confirm. Got a 50% drop, 10% drop, small drop, massive drop, 58%, 53%, 20% drop, COVID top right here. So I'm going over this really quickly. We can dig into this deeper, but there's no sign of a top. In fact, if anything, we might be seeing a bit of an ascending triangle on this yield.
Yeah, I mean, look, this yield might pull back down to like 2.4. Maybe it'll touch that trend line at the bottom. But I see this yield going to 7.5.
7.5. Yeah. Well, if we take a measured move on this,
Yeah.
let's see. Gets us right around 7 for sure. So the stock market is safe. Funds are safe as long as this yield is trending towards the highs and still threatening to move higher. I see no reason to be overly bearish in the S&P. I see no reason to be overly bearish for Bitcoin, except for perhaps a consolidation and a drop back down in the 50Ks, but that would be bullish, a bullish opportunity in my opinion. That's about all I have for today.
All right. Thanks for all the charts, Mark. You go ahead and jump off screen share. I don't really have much to show. Last week was a really good week with the ETFs buying up a bunch of Bitcoin. Not so far happening this week. Also, it's a shortened week, but I do expect it to come back. The Bitcoin purchases by the ETFs sometime next month, maybe the month after. And we'll see where it goes. Mark, I got to get going. I got to jump on another call in 15 minutes, top of the hour. Thanks again, and we'll try to do it again next week. I got a bunch of travel coming up. I mean, we might try to do this again next Wednesday. I will be in Las Vegas on by next Wednesday, so timing would work. It will be earlier in the morning for me, afternoon for you. And thanks again for joining, guys. Please like, subscribe, follow us on social media, and hopefully I'll see many of you in